I want to show you a little trick that you can do to join a trend that you may have missed out on the initial break of. This trade is called the FIBWIT. It stands for the first bar with trend. And I learned this from my buddy Rob, the creator of the Firelines. So if you're interested in his system, you can visit bullbarbie.link/firelines and you can get lots of information on that. But basically, the reason that I love this play is when you have a trend that's broken out, which works perfectly with his system. If you're familiar with it, we're looking at levels that break out. But, sometimes once that initial breakout has happened, you don't have that initial entry and you feel kind of lost and like you're chasing. So the FIBWIT is going to help you with that. Today is a really good example because price has broken out really nicely. And I'm going to switch it up today and show you this on Nasdaq, but you can see on the volume where the open was. So this is the Nasdaq 5-minute chart. You can see where the opening candle was right there. And if you've watched me in the morning lately, you've seen that we've been watching kind of the first 5-minute candle in addition to the first 15-minute to help kind of get an edge or maybe front run that trend a little bit, especially when we have a confirmation like VWAP and any sort of bias that we can add to that. But sometimes you might kind of still miss your entry. So on this one, we kind of did. There was kind of some weirdness when we were actually watching this live, and there wasn't a lot of confidence to get in this. But I still wanted to be able to join this trend later, so I can use a FIBWIT to enter something like this. And you can enter this on the 5-minute, although I will tell you this 5-minute, just because this time, in the morning session, you can feel like you're missing out on all this action. And then if you get a weird candle like this, what has a big wick, this is not going to be one that we want to use. So if you're trading the first bar with trend, we need a trend, and then we need some bars that go against it, and then we need the first bar that goes back with that trend, which in this case is this big wicky one. And there was some news that came in, kind of some random news about tariff stuff on this candle. So the 5-minute ended up not being a great chart for this, and you'll know that I usually don't go smaller than a 5-minute when I'm looking for some good intraday entries. But with a FIBWIT, this is one that I'll go down a little bit smaller. So I'll go ahead and go down to the 2-minute because it'll be a little bit easier to catch a FIBWIT on something like this. Now, Rob, who I originally learned this trade from, loves the higher time frame FIBWITs like the 5 minutes and the 15-minute, but he also trades a slower market, so it's a little bit different. In the Nasdaq during the morning session, it does kind of work better for me on the lower time frames. So here's the Nasdaq 2-minute, and you can tell this is the opening candle right here. So if we're waiting for a 5-minute FIBWIT, it's not really going to show up properly on a 2-minute chart, but it would have kind of been in this area, so we would have almost had a little double confirmation if we were watching more than one time frame. But back to the FIBWIT, so we have the trend break, and we did have VWAP down here, and plus that idea of the little opening range break. And with that, here's an opportunity to join this trend that has already started, even though we're being sensible and waiting for the first couple of minutes to settle when the New York opens. It's a lot of craziness. Good to let that initial burst settle. So there's the trend. There's the bar that is, pulling back into that trend a little bit. And then here's the first bar that goes back with the trend. Okay, so the easy way to look at anything like this on your chart for free is just to draw a box around the candle. And I have presets on my boxes. This is not the one I want to use right now, but I do have this one that's just a white box, so I'll just use that one. And then over here, it'll even have the levels marked for me. So that's the other reason that this is really nice. And then all we're doing, now that we have this first bar with trend, it gives us our entry and our exit. I'm going to enlarge this so it's a little bit easier to look at. So there is our entry candle. We can do an entry when price breaks the high of that trend candle, the first bar with trend candle. And then the stop loss goes on the other side of that box. And I actually usually give this a couple ticks. I'll put this order just slightly above that box. It's kind of hard for me to get this to cooperate right now, but I'll usually have a limit order, ideally a limit order, just sitting there just a little bit above so that price has just a little bit of wiggle room before it's going to tag me into that trade. And then the stop loss, I put just a hair on the outside of that box. So that box is the low of that first bar with trend candle. So our stop loss is just beyond that first bar with trend candle. This one, because it's wicked up like this is kind of a good confirmation of trend in our favor, continuing that way. So it's a good little entry there. And then depending on what you want to target, I like to look left and find some swing highs or lows or wicks or something that I can trigger there. You could also, if you're, just trying to do a risk to reward, find something like that in there. But you just want to find something that you can target with the limit order. And sometimes I have more than one position. And in that case, I can go for one target down here and another target up here. And then once price hits the first target, move the stop to break even or better and let that one continue that way. So there's this FIBWIT, and we can take a look and highlight these other ones. So let's say you missed this one. Well, then we have another bar against and then another first bar with trend. So there's actually another FIBWIT right here. So then you would have your entry there, your stop loss down here, and your take profit. Again, looking left, I'm not going to mess up the chart right now to find something that I can kind of gauge that to. Or you might use a Fibonacci extension off of the opening range or something like that. However you want to find your targets up there, and then your stop loss is going to be down here. This is where you have to kind of take into account, is there meat on the bone? Do we have enough room to run if we're really going to break out? So that's why I will incorporate kind of my morning analysis and the planning and the prep work that I've done to kind of make those sorts of decisions. But if everything looks good, you can just keep taking these. So here's another one right here. And, a trader like Rob, who trades really systematically, will just keep taking these over and over and over again until they fail. And actually, let's take a look at this one right here, because this one's a little bit more complicated. And so I want to go over some little nuances here. So this candle right here, where the box starts, is the first bar with trend candle, the FIBWIT candle. And technically, this bar did cross before it was pulled back down. That's why I like to have my orders, or if you're marketing in, it might be a little bit different, but that's why I like to have that order go in just a little bit beyond that level and just give it a little smidge of room, just to kind of take out some of those little, I don't want to call them errors, but just kind of misfortunes. And then it would have gotten stopped out down here. Now, if we didn't enter up here, and we had a stop out before entry, that invalidates the trade. So once you have that stop candle, that one's over. Which technically then makes this new candle the FIBWIT candle. And this was the news candle with the tariff news. There's always some tariff news these days. And so we had a high volume candle there. This one's really messy. So even though this would be another FIBWIT, it's really hard to take something like that because, your entry's technically way up here and your stop's way down here. So that's not really a good one. You would have to kind of use some finesse and maybe get in at the body or something like that. I don't play like that because then we start getting into, it's less systematic and more discretionary. And if I'm going to make a discretionary trade like that, I'm going to probably have that more based on order flow and some more artsy type trading craft like that. But there are kind of some more opportunities when it starts getting really choppy and the first bar with trend. Some traders will take this because this one over here, I'll highlight it, is technically a first bar with trend again. And there are some traders that take this. The reason that I don't really love these is because we're so far below where the trend was. So, we're like multiple candles below. So then I want to kind of see the trend reform. So in this case, I wouldn't take this one because the entry is below so many of the recent trend candles. And good thing I wouldn't, because this ends up really choppy. So then kind of where's our trend? It's kind of getting lost in all of this. But then we kind of get some interesting price action here, and you could potentially find a new entry over here. This one would technically be a FIBWIT, but if we're looking at this, if you're looking at this live, why would you enter on this candle? You really probably wouldn't. But then we get the breakout, and you can kind of use that breakout candle as your new FIBWIT. Because if you think about it, if you're going to move up a time frame, this candle is going to blend in with another one and you're going to kind of end that there. Or you can move to another time frame, but if you're staying on this one, The other way I'm looking at this is there's confluence in this FIBWIT here because it's also a trend break. So we always love confluence as traders. There's some more confluence there. If you really did miss this opportunity, because maybe this one is a little bit trickier, because really I don't think I would have entered on this candle on this technical FIBWIT, because then I would have had to enter on this one and all these other ones. That's a mess, right? Maybe we would have entered on this one and gotten stopped out. So up here, there's another opportunity right there. That doji is a candle against the trend. So the next one's a FIBWIT. So there's the entry up there, stop is down here, and then target above. So there, we might have another little situation here where we're consolidating a little bit before we move up. And come to think of it, if I do move to the higher time frame chart, we might actually see kind of how those FIBWITs would have worked out a little bit better. So this one, for example, is still really messy and hard to enter. But do you see how when you go up a time frame, you're going to have fewer trades, and this is true for really any setup. You go to a higher time frame, you're going to have fewer trades, but they're potentially more reliable. But just as a day trader, I've personally found some good luck using the FIBWIT strategy inside of the opening range on the lower time frame. So I thought y'all might like that little trick. And if you're interested in hearing more of Rob's work, I'll put some links below. He is in the Trading Ranch Discord. You can connect with him there and ask him. He loves answering questions and talking with traders, so he's a great resource to you there. And I've got a couple links for you where you can learn more about the fire lines. So it's bullbarbie.com/firelines, or if you just want to go directly to Rob's website, but let him know that I sent you, it's bullbarbie.link/firelines. All right, more videos coming up. I got to get back to work. Thanks for joining me. Love you. See you next time.